Role of finance in the development of an economy. The financial system of a nation is critically important to the operation of that nation's economy. Banks are an integral part of the global financial system, along with a variety of other entities that provide financial services. In this video, we will discuss the role of finance in the development of an economy. A nation's economic structure is firmly ingrained in its society, and is responsible for the employment of a sizable portion of the labor force. The authors Baily and Elliott identify the following three primary roles of the monetary and financial system. The provision of credit is essential to the functioning of the economy. Businesses can invest more than the cash they currently have, and individuals can purchase homes and other utilities without having to save up the entire amount in advance. This allows governments to make investments in infrastructure projects by reducing the cycles of tax revenue and correcting spending. This loan facility is provided to all stakeholders by banks and other institutions that offer financial services. The provision of liquidity is a service that banks and other providers of financial services offer to individuals and businesses to protect them against unexpected demands for cash. Banks offer their customers the opportunity to make deposits on demand, from which they are free to withdraw their money at any time. Similarly, they offer credit and overdraft facilities to commercial enterprises. In addition, to meet sudden demands for cash on the part of the stakeholders, banks and other financial institutions sometimes make offers to buy or sell securities on an as-needed basis and in large quantities. Services for risk management are provided by finance. These services include risk management from the hazards associated with financial markets and commodity prices through the use of risk pooling. Derivative trades enable banks to provide risk management. Even though they have taken a lot of criticism because of excesses during the financial crisis, these services continue to be incredibly helpful despite the criticism. The link between savings and investments. All economies require these three primary functions to work properly for growth and development activities to take place. In addition to these functions, the link between savings and investment contributes to the expansion of an economy. First and foremost, there must be a considerable amount of savings for there to be any significant level of investment and industrial activities. Financial organizations are the ones that make this type of savings account possible by offering enticing interest programs. The money that individuals put away in savings accounts is put to use by financial organizations in the form of loans made to businesses at very high interest rates. The availability of this financing enables enterprises to expand their production as well as their distribution operations. The expansion of financial markets. Increasing the size of existing capital markets is an additional essential task for the finance industry. Both fixed and working capital is essential to the operation of a business. The term fixed capital refers to the funds that are required to make investments in fixed assets such as buildings, plants, and machinery. The term working capital refers to the funds that are essential for the day-to-day operations of a firm. This could refer to the continual cost of purchasing raw materials, the expense of producing things, or the money needed to convey finished goods to retail locations or individual clients. The following are some of the ways that the financial system is helpful in terms of capital raising. Fixed capital. Businesses issue shares and debentures to raise fixed capital. Both public and private suppliers of financial services invest in these shares and debentures so that they can generate profits while taking on relatively low levels of risk. To acquire working capital, businesses often resort to the issuance of bills, promissory notes, and other similar instruments. These credit instruments are recognized in the financial markets that have been established specifically for this function. Foreign exchange markets. Foreign exchange markets provide for the receipt and transmission of funds to and from other nations and in a variety of currencies. These markets exist to assist those in the business of exporting and importing goods and services. Additionally, thanks to these foreign exchange markets, banks and other financial organizations can borrow or lend sums denominated in other currencies. Moreover, by investing their short-term idle money in the foreign exchange markets, financial institutions have the opportunity to both invest and earn from that money. These markets also provide governments with the means to satisfy their requirements for foreign exchange. Therefore, changes in the currency markets can affect the expansion and reputation of an economy in the global marketplace. Securities issued by the government. The financial system is utilized by governments to raise funds to meet both short-term and long-term fund requirements. In addition to providing tax breaks, governments will sometimes entice citizens to invest in their debt by offering enticing interest rates on government bonds and bills. The deficits in the budget are covered through the sale of government securities. Therefore, capital markets, foreign exchange markets, and markets for government securities are crucial for assisting enterprises, industries, and governments in carrying out activities that are essential for the development and growth of the economy. Infrastructure and economic expansion. The development of a nation's physical infrastructure is directly proportional to that nation's rate of economic expansion. The expansion of secondary industries is directly influenced by primary industries such as power, coal, and oil. These essential infrastructure sectors receive funding from the nation's monetary and banking systems. The requirements for capital investment in infrastructure businesses are extremely high. Because private actors can't raise such a large amount, governments have traditionally been the only entities responsible for funding and overseeing infrastructure projects. On the other hand, the economic liberalization program encouraged participation from the private sector in industries related to infrastructure. The private sector in India can get more funding thanks to the assistance of development and merchant banks like IDBI. Trade development. The most crucial part of every economy is the trading that goes on. The financial system serves as a pillar for commerce on both the national and international levels. Financial institutions are the ones who can supply the necessary funding for traders. On the other hand, financial markets play an important role in the process of discounting financial instruments like promissory notes and bills. Commercial banks provide money for foreign trade in two stages: before and after shipments are made. Importers can get letters of credit, which helps the nation bring in much needed additional foreign currency. Increases in available jobs. The economy's financial system is one of the most important determinants of employment growth. The expansion of employment is a direct result of the expansion of businesses and industries that receive financing from the financial systems, which in turn leads to an increase in economic activity and domestic trade. An increase in the amount of trade leads to a rise in the amount of competition, which in turn leads to activities such as selling and marketing, both of which contribute to an increase in the number of people employed in their respective industries. Venture capital. The expansion of venture capital and other forms of investment in new businesses will fuel the expansion of the economy. At the moment, there is a limited amount of venture capital available in India. Due to the high level of risk involved, direct investments in businesses by individual corporations are difficult to do. The majority of the funding for enterprises comes from various financial institutions. This market will benefit from a rise in the number of financial institutions that support entrepreneurial endeavors. Maintains a healthy economic growth balance. The expansion of an economy's various subsectors is kept in check by the functioning of its financial system. Some industries fall under the primary, secondary, and tertiary sectors, and all of them require adequate funding for expansion. These three industries, manufacturing, agriculture, and services, are supported by the nation's financial system, which also ensures that adequate funds are available for each of them. Therefore, the field of finance plays an essential part in the growth of every economy, and no economy can function efficiently in the absence of a robust financial system. Do you feel this video helpful for increasing your knowledge? Give your feedback in our comments section below, and subscribe to our YouTube channel for more videos.